For this assignment, we have chosen Hexstar Healthcare Berhad and Supermed Corporation Berhad. Both established healthcare companies listed on Bursa Malaysia for over 20 years. Their recent 5-year annual reports offer a solid basis for analysing their combined assets with all necessary financial information accurately presented. What is a liquidity ratio? A liquidity ratio measures a company's ability to meet its short-term financial obligations by comparing its current assets, like cash and receivables, to its short-term liabilities, such as debts and other obligations. It helps assess the company's financial health. Well, what about activity ratio? An activity ratio helps assess how efficiently a company uses its asset to generate revenue and cash. It evaluates the efficiency of a company's fixed assets, inventories, and accounts receivable.
The leverage ratio shows how much debt a company has compared to its asset or income. It helps measure the risk of handling debt. And if the company can pay, the profit ratio shows how well a company turns sales into profit. A higher ratio means the company is better at making money from its business activities.
Hexstar Healthcare Berhad, formerly known as Rubrex Corporation, was founded in 1996 and listed on Bursa Malaysia in 1997. Initially, the company focused on manufacturing rubber gloves in Ipoh, Perak. Today, it operates a 144,000 square meter manufacturing plant producing a wide range of natural and synthetic rubber gloves distributed to over 100 countries. In 2020, Hexstar entered a new growth phase, diversifying into real estate and medical equipment, including self-test kits to meet evolving market needs. Hexstar is committed to providing high-performance products, ensuring safety and comfort across various industries, from healthcare to food handling. With a strong focus on sustainability and global standards, Hexstar continues to lead in the glove manufacturing industry while protecting communities worldwide.
Supermed Corporation is a leading latex glove manufacturer listed on Bursa Malaysia. It is a global producer, distributor and marketer of a high-quality medical glove. As a own brand manufacturer, Supermed has a successful brands such as Supermed, Aurelia and Maxton. The founder of Supermed Corporation Burhan is Datuk Seri Stanley Tai and his wife Datuk Seri Cheryl Tai. Supermed Corporation business first manufacturing facility in 1989 years. The business also is the first Malaysian on-brand manufacturing latex glove producer. Through effective branding, creative packaging and high-quality product, Supermed gained a strong foothold in the US dentistry market. Committed to the pursuit of quality and excellence, Supermed continues to focus on product innovation and research and development.
Hexstar Healthcare Berhad's liquidity ratio shows strong performance from 2019 to 2023, indicating the company's ability to cover short-term debt with its current assets. Notably, 2021 stands out with higher net working capital, current ratio, and quick ratio. Similarly, Supermed Corporation Berhad demonstrates good liquidity performance from 2019 to 2023, reflecting its capacity to use current assets to settle short-term debt. Hexstar Healthcare Berhad's activity ratio performs well from 2019 to 2023, demonstrating its ability to cover short-term debt with current assets. 2021 stands out with strong liquidity marked by higher net working capital, current ratio, and quick ratio. Similarly, Supermed Corporation Berhad shows strong activity ratios from 2019 to 2023, indicating efficient asset management for generating revenue and cash.
Hexstar Healthcare Berhad had strong leverage ratio from 2019 to 2023, meeting financial obligation and managing interest payment well. Supermed Corporation struggled with weak leverage ratio in the same period, though 2023 shows some improvement. Profitability was also strong with good profit from sales and investment, creating value for shareholders. Profitability was low and the company faced challenge in it, generating profits or shareholder value.
In comparing Hexstar Healthcare Berhad and Supermed Corporation Berhad, both companies show strong financial health with good current and quick ratios, indicating strong liquidity and the ability to cover short-term debts even without relying on inventory. However, Supermax stands out with larger net working capital, meaning it has more short-term assets to meet liabilities and manage unexpected challenges. This gives Supermax a stronger liquidity position in 2023, enabling it to handle unplanned costs and take advantage of growth opportunities without worrying about cash constraints. When comparing Hexstar Healthcare Berhad and Supermax Corporation Berhad, we see key differences in financial and operational performance. Supermax outperforms Hexstar in account receivable turnover, showing slower but more consistent collections, while Hexstar faces faster turns with higher risk of bad debt. Supermax also manages cash flow better with a shorter average collection period, while Hexstar's longer collection time might indicate issues with collections or more lenient payment terms. In terms of supplier payments, Supermax pays faster likely due to efficient cash management and strong supplier relationships, while Hexstar takes longer, possibly benefiting from extended terms. When it comes to inventory management, Supermax has a higher turnover rate, suggesting better stock control and reduced risk of obsolescence, whereas Hexstar may be struggling with overstocking or weak sales. Finally, Hexstar excels in total asset turnover using its resources more efficiently to generate income, while Supermax's lower turnover suggests underutilized assets. Overall, Supermax shines in financial management, while Hexstar demonstrates superior asset utilization to drive revenue.
In leverage ratio, Supermax Corporation Berhad debt ratio is larger than Hexstar Healthcare Berhad. The differences in debt ratio can be reflected in the various financial strategies used by the business. Hexstar Healthcare Berhad would want to reduce debt exposure in order to reduce financial risk, but Supermax Corporation Berhad is ambitious in growth phase that require a lot of capital. Supermax Corporation Berhad has a greater debt to equity ratio than Hexstar Healthcare Berhad. This variation can be reflected on companies' growth plans. Hexstar Healthcare Berhad might be an industry where business typically steer clear of high debt. Supermax Corporation Berhad might be an industry where leveraging debt is prevalent. Hexstar Healthcare Berhad has a higher time in interest earn ratio than Supermax Corporation Berhad. It shows that Hexstar Healthcare Berhad likely has a stable growing business, while Supermax Corporation Berhad faces challenging with profitability, leading to difficulty in meeting interest payment. From data given, Hexstar Healthcare Berhad had managed effectively about financial strategy and risk profile. For profitability ratio, both of companies have a high gross profit and very efficient in production. However, Supermax Corporation Berhad is favorable because the company has very low production cost in relation to its income, which could signal a high profitable business strategy. Hexstar Healthcare Berhad has a larger net profit margin because they were able to convert revenue into profit due to their effective management and reduced costs, while Supermax Corporation Berhad net profit margin may need to be reduced or improving the operational efficiency to increase profitability. Hexstar Healthcare Berhad has a larger operating profit margin, return on asset, and return on equity. It is showing greater efficiency in production, operational management, and asset utilization. They also perform better in terms of expenses management and profit generation from equity. For Supermax Corporation Berhad have lower operating profit margin, return on asset, and return on equity may indicate that its assets are not being used as efficiently. In comparison to Supermax Corporation Berhad, Hexstar Healthcare Berhad has a better total profitability ratio in 2030.
In short, Supermax is doing better than Hexstar Healthcare. It has steady growth, showing good management. Supermax is also in a stronger financial position with more liquid asset to cover short-term debt. It collects money faster and handle inventory better, which helps its cash flow. Although Supermax has a higher debt level, both companies have manageable debt. What stands out is Supermax's higher profits with better returns on asset, equity and earning per share, showing it's more efficient at making money. Overall, Supermax is stronger in liquidity, efficiency and profitability even though it relies more on debt.